acquire a cheeseburger because I need to eat it. I acquire a house because I need to live in it. I acquire an airplane because I need to travel. I acquire money because I need to save, store, and then later exchange my time, energy, my effort, my labor. And so money serves a very particular purpose within the marketplace. And I believe, like any other market good, it's competitive. And so a dramatic event like a war, like some political fighting, or even the macro environment we're living in today can greatly expedite a monetary regime change. But I think naturally human beings seek out the best money because it is a technology we invented to solve a very particular problem within the marketplace. And I naturally think something like Bitcoin fulfills a lot of the properties that humans look for in a money to acquire, to save and exchange their time and energy. A lot of what being human is an ability to price tomorrow, an ability to lower our time preference, innovate and create value today and bring it with us tomorrow. And money is the technology that enables us to do that. And so when I say, Bitcoin is actually the most ambitious technology today, the entire equities market is only $150 trillion. So even if someone like Facebook or Amazon or AI were to be the most successful equity ever and soak up all the equities value, it wouldn't even come close to half of Bitcoin's opportunity. So when people compare Bitcoin to another cryptocurrency like Ethereum or to another equity like a Tesla, they're actually vastly misunderstanding the opportunity and the size that is in amazing money for our species. And so if Ethereum were to become the next Amazon, Amazon's only worth $1.5 trillion. It's a rounding error compared to what Bitcoin is trying to do. To produce real stuff. Like Russia is the greatest natural resource producer in the world. China is the greatest manufacturer in the world. Germany creates the best cars. The US doesn't create much of anything anymore for this very structural reason, except for financial markets. And so the reality is this is not a very sustainable practice. Printing pieces of paper out of thin air in exchange for real goods and services is not a relationship that is to be sustained. It actually was a reaction to a decimating world war. And so what I think we're living through is the unwind of that. When you see President Trump say things like, we need to fix our deficits. We need to bring back a middle class. We need to bring back a manufacturing class. We need to be able to produce our own stuff. Is because there is a global trade imbalance happening where China is running a trade surplus of something to the tune of $1 trillion a year. And the US, given this economic alignment globally, has racked up over $35 trillion worth of debt. And there are no marginal lenders. I think it's too grandiose of a statement to take seriously. The reality that I think is absolutely true is Bitcoin is the most accessible liquid smoke alarm for fiat liquidity. My general mental model individually is that Bitcoin equals technology plus fiat liquidity. It equals the technological advancement of things like cryptography, distributed networks, plus the more fiat currency units that need to be issued for governments to remain solvent and an existing financial system to transition to something new. And so I think Bitcoin is most sensitive to global liquidity, but so is the stock market. Like David, if we were to go back to the macro environment I just laid out, where countries like China are living in a $1 trillion annual trade surplus, that capital can't be invested locally. That capital has to, because if you're looking to be competitive in exports, you can't have a powerful, strong local currency. So when China is making profits in global trade, they have to invest it outside of the country. And a lot of that trade surplus has found itself in the most important innovation that Satoshi came across with Bitcoin is the proof of work concept. It makes Bitcoin energy money. So to your point, I view money as time and energy in an abstracted form. It is the market representation of our effort, our labor, our time, our energy, our contribution, our work. And so you want your money to have a direct relationship with energy component. An exaggerated way to explain this is if your money doesn't have a relationship to work and energy, and you can just print it out of thin air, then it's highly inflationary. It could be debased. It's a bad store of value. So when you have an energy-based money that actually is protective and applies physical constraints to its ability to inflate and be receptive to an onslaught of demand, it actually allows us humans to lower our time preference, to be more future oriented. If you are not so panicked to think, how am I going to be able to afford this house? How am I going to be able to and take advantage of it?
Yeah, but you know who doesn't agree with you is Peter Schiff, who you've debated on my show, on a number of points. First, on the fact that Bitcoin's value is derived from the things that you talked about. Bitcoin has no value. It's driven by hope and and expectations, basically just thin air. But the second point is that risk isn't the same as volatility, because we were talking about how we can measure the risk profile of Bitcoin, and Bitcoin being an asset with a very high standard deviation is considered risky by traditional finance terms. So how do you reconcile that difference between risk and volatility in Bitcoin?
Yeah, well, I think what market participants need to understand is volatility is a prerequisite to performance. If I walk into a building and I enter the lobby on the first floor and I need to get to the penthouse, my or trust an institution as much as they want, you're more than welcome to open a Strike account and I'll hold your private keys for you. Now, I don't necessarily advocate that as the direction society should be grinding towards, but if that is where you are today, there are businesses and services that offer that product. I do fundamentally believe that if we're going to restore any sense of harmony to society, it's going to rest on the idea of personal responsibility again. I do think that society has found a level of comfort that's disadvantageous to human harmony, which is, it depends on who gets elected if I'm happy. It depends on the stock market if I can afford my home. It depends on what they're serving in McDonald's if I'm going to be overweight or maintain weight. And restoring personal responsibility in society, again, I think is foundationally important. No one's going to care more about you than you, and no one owns the outcomes of your life more than yourself. And so I do want to encourage the idea that owning your own property, owning your own money, owning your own time and energy in a self-sovereign way, I believe is in the best in a more public forum. So for the audience, 21 exists purely to give the world a new kind of public company, one that's built entirely around Bitcoin. We consider ourselves one of, if not the most pure play public equity, or attempting to become a public equity in the market. The founding story. So I co-founded the business with Tether. Just so everyone knows, I've been friends with Tether for a very long time. I don't think people know I've been in Bitcoin for almost 13 years. I believe some of the Tether and Bitfinex founders have been in Bitcoin longer than I have. So we've been friends just because, David, there weren't that many people in Bitcoin that long ago. The meetups with free pizza and beer, where you were buying Papa John's pies just to see if anyone else in your neighborhood was into Bitcoin. There were only 9 or 10 people at those meetups. So I've known the Tether folks for a really long time. I think our most famed overlap is El Salvador. I was obviously better than myself, than Tether, people that are Bitcoiners, know how to build and work in this industry, and feel like we have the blue chip credibility and can bring some startup upside to the capital markets in a very pure play way. And so we sat around the analogous campfire and we're like, what should we call it? And I love the name 2021 because XXI, the ticker, was available, 21 in Roman numerals. And so I said, I really like this name because, again, we are a Bitcoin business. We're founded as such. We're not pivoting. We're not rebranding. We're not trying to find
21 million Bitcoin cap. Is that
because
where
of
that
the 21 million?
From?
Yes.
Right.
And I thought it was very adjacent and clever and sexy. And again, it was Bitcoin. And so then I made mention, we were like, how much capital should we seed the business with? And if you look at our public filings, actually, between Bitfinex and Tether, if you add their initial seeding, it's 21,000 Bitcoin. And so that 21,000 number, because I was like, guys, 21's our number. We got, memes rule the world. We got to go to the market. We're going to have 21,000 coins. Our name's going to be 21. Our ticker. Backside, they've been such a forward-thinking financial partner on Wall Street when it comes to crypto and to Bitcoin. And so it was a natural partnership for us. And that's what's gotten me to this podcast. That's really a lot of the story. And we're planning to go to market with over 42,000 Bitcoin at approval.
You are creating some Bitcoin products, right?
Yeah. So again, I think I would say, the opportunity in the market that we saw is there's a lot of really small cap, small size businesses that we don't think are institutional grade or can represent Bitcoin in an institutional capacity. And that those are maybe not the MicroStrategies of the world. And so we wanted to bring blue chip credibility in initial size. So we're coming to the market with billions of dollars worth of Bitcoin, a lot of capital behind us in partnerships, access to Wall Street, a lot of experience. We know what we're doing. But then the startup upside is that, we didn't see anyone take this Bitcoin treasury opportunity and actually build products. All we've seen is people just buying. Yeah, well, I think an important piece for listeners to understand is that the way the Bitcoin protocol is designed, you don't have any more or less influence based on how much Bitcoin you own. Everyone should know that. That actually is a proof of stake network. So networks that use proof of stake, you actually grow or lessen in influence depending on how much of the currency unit you own. That's not true for Bitcoin. So the fact that Michael Saylor and MicroStrategy own as much Bitcoin as they do, that actually doesn't give him any more outside influence on the protocol itself. So all of the sovereignty and individual rights that the Bitcoin protocol operates and defends within its distributed network retain and remain the same. And that's a really, really important design of the actual technology itself. So it doesn't matter how much of a currency unit like Bitcoin someone owns, they don't have any extra coin per share, BPS, and that is to replace the traditional financial market metric earnings per share, EPS. And then the other is BRR, which is a little clever play on Burr, money printer go Burr, but it stands for Bitcoin return rate. And it is to replace a metric like ARR. And the reason, and in our filing, what we encourage market participants to judge us on is actually in Bitcoin performance. So my mandate and my goal to our shareholders and to the wider financial markets, David, is to be able to grow our Bitcoin per share. So in a hypothetical sense, let's say our Bitcoin per share is 0.05 Bitcoin per share. That's the amount of Bitcoin on our balance sheet on a per fully diluted share basis. Our intent as a company is to be able to work to grow that to 0.6 Bitcoin per share, 0.7 Bitcoin per share. And we want the markets to judge us on being performant in Bitcoin terms. It's a capital markets vehicle that's designed to outperform Bitcoin. And so our time horizon with Bitcoin is forever. We don't ever plan on hedging or selling any Bitcoin company. You're investing in a leadership team to execute. And that leadership in part is me. And what we do is we go out and access capital markets and raise capital in accretive Bitcoin terms. We go out and build partnerships. We go out and build products, build cash flow, all correlated and related to Bitcoin to grow that Bitcoin per share. So our mandate to our shareholders is, by owning a share in the company, our intent is to grow your access to Bitcoin just by being an investor, just by being a shareholder. If you contrast that to a vehicle like an ETF is static exposure. When you buy IBIT, the BlackRock ETF, you're not investing in Larry Fink and BlackRock to go out and grow your Bitcoin per IBIT share. If you start with 0.05 BTC in IBIT, you end with 0.05 BTC in IBIT. It is a static exposure vehicle where 21 is a business. And so that is what we think is attractive to investors into the capital markets, is a pure play, blue chip credibility with startup upside vehicle in the capital markets that's just working at all, is giving capital markets what we believe the ultimate vehicle to participate in Bitcoin and its story. So two independent businesses, the only overlap is Bitcoin and how much each business believes in it.
On Strike, help me visualize, how are you executing the vision in countries with unstable currencies or weak banking infrastructure? Yeah,
so Strike, we consider each region of the world almost as a different product line, because you're right, there's different markets, different extremities, different conditions. So we have Strike US, Strike EU, and Strike UK. Those all operate with the local currency. So we do support the dollar, the euro, and the pound natively. And then in some of the markets in Latin America and Africa, the currencies are so weak and our customers don't even want to hold them to where in which we offer stable coins. So we actually do offer USDT in those markets. And so some of our products in emerging markets are stablecoin plus Bitcoin. And then some of our...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.